Hello, everybody. Welcome to the Business Professor Show. J. Mance Gordon here. I'm your host. What I want to talk to you about today is it better for your startup venture to bootstrap, that is, continue to fund operations from current revenue, or is it better to seek outside investors? Now, this is a question that you're going to receive a variety of different answers from different entrepreneurs. And it will depend largely upon the nature of the entrepreneurial venture that you're pursuing. Now, I want to start off by saying, for those who aren't terribly familiar with this question, startup ventures are a little bit different from your traditional mom and pop's small business or lifestyle or slow growth business. Startup ventures tend to be high growth. That is, their very nature, they are scalable. So if you can scale out and grow rapidly, then that's going to be the guiding metric for your success. That is, if you can put $1 into the venture, then you can create more than $1 of value in growth. Then you should put that dollar into the venture to create that additional value. But with startups, unless you achieve a certain amount of growth, that is, you hit some level close to maturity, that is, later on in the growth phase, where you ultimately either become profitable or you've achieved the metrics that make you a target for acquisition by another company, and thus you can extract value from the venture in that way, that it was you built it and grew it with the purpose of acquisition in mind, rather than turning profitable or going public and later becoming a profitable, mature company. So with that being said, back to the original question, if you are one of these growth-based ventures, you are very sharply on that J curve where if you put $1 into the venture, you are going to receive more than $1 worth of value in growth from the investment of that dollar. Should you focus on streamlining your operations and bootstrapping, that is, using the revenue that's coming in from your operations or your personal funds or anything else to grow your venture? Or should you go out there and look for capital investment from either angel investors or professional venture capitalists? Now, again, you're going to receive different answers from different folks with different penchants for what it means to be successful. Obviously, a venture capitalist or someone who's grown a venture-backed company is going to espouse the virtues of receiving the right type of venture capital. That is, venture capital under terms that are favorable to the company, that still grants you the autonomy that you need to run the business and grow, and the investors aren't a hindrance to that growth, which that may be more rare than it is common these days, as venture capitalists are increasingly taking more of an active part in the management of the company. And when I say the management of the company, they are securing board rights for high-level decision-making about the company, and they're holding the entrepreneurs to specific performance metrics that ultimately may affect the strategy and the resultant growth of the company. Now, on the other side, do you risk failure if you go the bootstrapping route? That is, your potential to be successful might require you achieving a certain level of growth. So the question becomes, can you get to that level of growth by bootstrapping? And if you can, the answer is very simple. You go with bootstrapping because it doesn't dilute your ownership interest as owners. You don't have those outside influences that can bring the company down. Now, I know many of you are thinking, well, venture capitalists oftentimes bring a ton of value, that is in the form of experience, connections, additional resources if necessary, clout associated with being financed by a certain venture capital firm. All those are definitely advantages. But many of those advantages can be replicated in a bootstrap firm as well. You can have advisory boards where you bring on individuals who offer some of the similar connections and guidance and things of that nature. So the question again remains, is the value worth it? And how do you know if you have the potential to meet those growth metrics? Because there is no predefined path for a startup venture. You have no idea exactly how big you will be or how big you can be. Everything's just an estimation, and likewise, you're estimating how quickly you can grow and whether your growth at your given stage will continue through future stages. So again, there's no answer to this question, but many people have strong opinions about it. So I would love to hear more about your opinions. So if you have an opinion on this, please jump in the forum, voice your opinion. We'd all love to hear it so we can get a conversation started. But in any event, please join us in the community there. I hope to see you around the Business Professor soon. But until then, take care. Hello, everybody. I hope you're enjoying the content, and please pardon the interruption. I just want to take a moment to remind you that this is just a small sample of the various resources we have in our academy at thebusinessprofessor.com. We have long-form book summaries, business courses, business and legal templates, a career TV channel, an AI-powered business encyclopedia, recent headlines, and lots of other benefits to explore as well. So please, I hope to see you as a member of the community sometime in the future.